I mean, I'm not surprised. Obviously, they're going to spend. The question, I think, for many is, are they going to spend as much as they thought they were before?
Yeah, and exactly, Scott. And so I interviewed VP of Reality Labs, Ash Javeri, at our Tech Executive Council event yesterday. And I asked him that, why is it so expensive? What are you spending this money on? And his thesis, I guess you could say, matches Mark Zuckerberg's, of course, which is we're building a brand new computing platform. That is not cheap to do. We think we're fundamentally going to change the way people interact online, use online services and so forth, and create this new version, this new 3D version of the internet. So just bear with us. It's going to get better. Meanwhile, look, they did lay off those 10 or 11,000 people. A lot of those people were from the traditional Facebook businesses, not necessarily, and HR and things like that, not necessarily in this Reality Labs division, which, by the way, lost $3.6 billion just in that one quarter alone, and expected to lose even more going into next year until they get through this current product pipeline and spend their way through that.
So they may very well do what they say they're going to do. They may, in fact, change the world through this new computing platform. The question I have for you, Carrie, though, the problem with that, Steve just said they're going to spend, and they're going to spend a lot, and it's very expensive. And in the current environment, are you, given what the stock has done, do you have the patience that Steve says they're almost demanding that people have?
By the way, that patience, 10 years or more.
Yeah. Not that patient. So,
but that's what it, no, but that's what it is.
When I heard the interview, I thought to myself, I really did. He's got to say that. He's got to say, we are so committed to this. This can be 10 years. This can be so many billions of dollars.
Does he?
You guys have no idea. But
didn't they say that before, and that's part of the problem?
Well,
now people want them to say something different.
Correct, but they have said things that are different because you get to a point where sort of the elastic snaps, and Zuckerberg says, no, I made a mistake, or I wasn't ever going to fire anybody, but I guess I'm going to fire 11,000 people now. And we're taking more and more space everywhere in the world, and suddenly they're giving up space left and right, and including in Boston. And you see it over again with tech companies committed to a spend, and then suddenly they get religion on the cost side, and nobody likes when their stock options become worth less and less and less. So I hear what you're saying. I just think that it may not play out that way. And if you have Twitter losing their audience and TikTok perhaps being banned, there are things that are positive about this, even though we have the negative on the side you're talking about.
In other words, I mean, we remember, the most recent altimeter letter, right, from Brad Gerstner, which we told you all about on this show, and it was about getting fitter and more focused. And it extended beyond just the rank and file, right, of, cutting the workforce to what he thought was a more appropriate level for the environment that we're in. But the spending on the metaverse, their investors are highly critical of it. Are they listening or not?
It doesn't sound like they're listening, at least in the near term, Scott, because they're going to increase spending again. So it's going to be well over $10 billion in losses for this division this year. It was $10 billion last year. And they haven't really predicted what it's going to be next year, but it's going to be more than it is this year. So there's no sign. Now, Zuckerberg did say in the earnings call, then it's going to kind of even out and slow down after that. But no, they're not listening. They did lay off, but again, not maybe where the altimeter folks would have preferred.